everyone, welcome back to my YouTube channel. Now, today I'm going to do a part 2 to my last video, which I showed you on how to enter bills and how to pay bills in QuickBooks Online. And today I'm going to do a short recap of that, but also show you two advanced topics that I know has been a big issue for a lot of mid-sized business owners when it comes to this type of bill payment in QuickBooks Online. So today I'm going to show you how to enter bills and how to pay those bills with a credit card that the business use, and also how to pay bills that the owner pays for out of their personal funds. So that is what we will go through today, and let's get started. Now, once again, the QuickBooks that I am using is QuickBooks Online Essentials, just for your records. And what I'll start with is I will now record a bill. In fact, I'll add a new vendor, I'll record a bill, and then I will show you how to pay that bill using a company's credit card. So first of all, let's go to expenses, vendors, and let's just add a new vendor. I'll move my screen a bit. Okay, so we'll add a new vendor. Let's call this vendor just a basic food store. Let's call it Super Value. Okay. All right, and once again, all the information you can fill out if you so choose to in your own example. So I'll click save. And let's create a bill. We can go the shortcut way. So we're in the vendor center. We'll go to create bill. And let's say that we're purchasing, let's say, this is a food store. Let's assume that we're just buying meals, meals for staff. And we bought this on August 27th. All right, so there were two ways that you can add a new account. The first way is to actually go in the chart of accounts and create it from there, but we'll just do this next shortcut way where you can add a new account when you are entering the bill. So we'll add new. All right, and we will make this an expense. And let's just call it entertainment meals. We'll assume that we're buying meals for the staff, for staff, staff benefits. So we'll just call it staff meals. We'll save and close. And let's go back to the top. We'll put terms. We will make it at 30 days. Assume the bill number is 167. Okay, and let's say that this is lunch for staff party. And let's assume that the total for this was $320. And we'll save and close. Okay, so the vendor is in and the bill is in. So let's assume that this bill was paid for with the company credit card. Okay, not debit card, the company credit card. And let's go in this once again. And we will go to that bill. And in here, we can click the arrow mark as paid. And what you'll need to do is, because it's paid with a credit card, you need to add that as the payment option or the other quote unquote bank, although it's not a bank. So it's not from the checking account, it is from the credit card. So we'll add that in this once again, and we'll call this credit card. And the detail type is credit card. And to be more specific, let's say this is a Scotiabank credit cards. Let's go. Scotiabank credit card. And we'll save and close. I'll move the screen a bit more. So Scotiabank credit card, we pay this on the same day of the bill. And we'll reference it as CC payments on 08/27. Okay, and here you have it here, the bill payments. It is the reference number and is for the entire bill for 320. And here we will click save and close. And here you will see that the bill was fully paid off by the credit card. And if we click in the bill again, it will show that it is paid. It says at the top right, paid, and one payment made on the 27th of August. And we can click in there. And again, if you have to amend anything, let's say the bill amount was wrong or the credit card amount was wrong, you can always make changes. Now I want to show you as well what it looks like on the dashboard, because although it's not a bank account, it is a credit card. And here you will see that the account is listed under bank accounts, but of course, credit card is a liability. So it is here where that shows up what was charged the card. Now I'll also show you this briefly, how to make a payment on this credit card. And I didn't really plan to show this part, but I will still show you. So let's go here. Let's go to new. And let's say we'll make a check. We'll write a check. And we'll just add a vendor. We're making it to Scotiabank. And this time, yes, we are using the checking account to make a payment on that credit card. And let's say the payment was made on the September 3rd, and it was check number 198. And to make a payment on the card, you will have to select that credit card. And you can just put the description payment on credit card. And let's say you put 150. Save and close. And here you see the balance of that credit card has reduced to $170. Now, all of that and how that was done, that is really the basic, that is accounting principles, because QuickBooks is an accounting software, and it helps if you understand how debits and credits and how liabilities and assets really work from accounting fundamentals. So here, let's go to reports. And let's look at the balance sheet, because the liability and the asset will be on the balance sheet. And here you will see, let's do as of today, this year to date. And here we see the checking account, and the liability of the credit card is here. And of course, we can check in, click in, look at the transactions made, which is the credit card payment, and then the payment on the credit card. So the liability was charged to the card that went in, and then a payment was made on the liability to reduce that credit card liability balance. Okay. All right, so now next, and pretty much the last topic, which I think will be a pretty big topic if you have this type of problem in your business, is how do you pay a bill in which the business owner used his own personal funds and actually won't even be reimbursed from the company, but will just use his funds and then probably count it towards their owner's contribution account in the business, or in their equity in the business. So first of all, let's enter another bill. And let's go here to new. Let's go to bill. Okay, so let's go here, and we can add a new vendor from here. And let's assume this vendor is, we'll call this Tops Building. company. Okay, let's save that. And let's assume in July 29th. We can still put terms 30 days. And let's assume the bill number was 984. And assume he bought equipment for the business. We'll keep it simple. So we'll select the account of equipment if that is in the account in the chart of accounts. Well, it's not. So let's go here. We'll add a new account and we'll make it an asset account, fixed assets. And let's assume let's look at the best option for this. Machinery and equipment. You know, he's purchasing something large for the business, and he bought it from this building supplies company that sells equipment. We'll leave it as is, machinery and equipment as the account name, just to make it simple. And we'll save and close. And let's say he bought let's say a forklift. And let's say that costs $25,000. You know, this is hypothetical. So we enter the bill to tops. So the machinery was bought for the business and it cost the business $25,000. And we'll save and close. And let's look that up. Let's go to the vendors just to double check. And here you see Tops Building Company the bill is entered for $25,000. Now this owner let's assume this owner paid the full $25,000 out of their pocket. Now, how do you record this payment? We can go here, make payment. Now, because the bill was not paid from the business, we cannot choose one of these business accounts. It wasn't paid from the checking account. It wasn't paid with credit card. Instead, it was paid out of the owner's personal monies. So let's add new. We'll add a pass-through bank account. Well, this will be a hypothetical bank account. So bank, and we'll call this, we can just call it anything. Let's call it savings. And we'll call it, let's call it a clearing bank. All right, let's save and close. And let's assume that he paid for this on August 1st. And we can put the reference paid by owner. And the total amount, $25,000 is there, ticked, and there is the bill payment. And there you see $25,000 paid. So let's save and close. So there you see the Tops Building balance is 0. But if we go to the dashboard and look at that bank account, that hypothetical bank account we created, clearing bank, that has a negative $25,000 amount, which isn't correct because this should reflect what the business has or doesn't have. And this isn't really a real bank that the business uses. So the best thing is to clear this amount, it's $25,000 off the books, and then make sure at the same time the owner's contribution amount on the equity side of the books has increased. So how is this done? I will show you the best way to do this. So let's go to new. Let's go to bank deposit. And we'll assume that the funds, we're doing a bank deposit, although no monies went into the bank account. But let's assume that, of course, this is the clear that $25,000 amount. So this is going against that clearing a bank account done on the 1st of August. And again, this is going against the owner's contribution account. And so we will just select that account. owner's contribution. We will add that account actually. And let's add it as an equity account. And let's call it owner's equity type. And we'll call it owner's contribution. Owner's contribution. We will save and close. And in description, you can put owner paid for forklift from Tops building. Let's correct our spellings. Okay. And it is for the $25,000. Okay, so what this is going to do, do you see this negative balance at clearing bank? This will now make that 0, and this will now increase his contribution. So let's save and close. And there you see on the dashboard, the clearing bank has been cleared out. And if we click in, we will see the in and out transactions of this. So there is the original bill payments, but this is the deposit, hypothetical deposit made to balance out that 25,000. And if we look on our balance sheet, we go to the balance sheet. Let's do this year to date. There you will see the $25,000 contribution, increasing that partners or that owner's contribution to the business against their equity, increasing their equity. And if we click in, we will see that $25,000 transaction going through. Now, when it comes to transactions like this, again, you will have to understand the basic accounting principles and how QuickBooks really is an accounting software, because behind the scenes, every debit has to have a credit. And if you understand what each transaction does in QuickBooks and how it affects the debit and credit side of the accounting behind it, then you should be able to figure out these types of difficult transactions on your own. Now, I want to address, like, let's say that, you may ask, why not just create a bank account called the owner's contribution and leave it as is? Now, that would be incorrect, and I want to show you why, actually. So let's assume another bill was recorded and paid by the owner, and we'll assume that we just created an owner's contribution bank account and leave it as is. So let's assume again, Tops building, and let's assume they bought on the 15th with the bill number 650. And let's say he bought equipment. Let's say he bought let's say in this case, he bought vehicles. And let's say he bought a Dodge Ram truck, 2020. And he got it for $33,000. Okay, let's save and close. We'll go back to vendors and make sure, yes, the bill is entered. So let's go pay the bill. Let's make payment. Okay, so here the Tops bill is showing. And let's assume that instead of this clearing bank account, we just add owner's contribution or owner's payment as a bank account. And we can just call it savings. So owner's payment. Okay, or you can select, of course, make your own description. We'll save and close. And let's say he paid this on the same date, paid by owner. And it's for $33,000. We'll save and close. So the bill is paid. As you can see, Tops is 0, but on the balance, you will still see owner's payments. And that's if you can agree, that wouldn't really look good on the dashboard because it will show that the business has a negative $33,000. Because in this instance, the owner isn't looking for reimbursement. They're just applying it to their contribution account. So if we even look at the balance sheet and see how this looks if we just left it that way. You will see that bank accounts has, that negative 33 created a negative bank balance amount, which isn't true for the business. The business has money, but it's just that the funds that was paid out of the owner's pocket need to be reflected in the owner's equity and not the business bank account. So to clear this, we'll just do, we'll go back, bank deposit. We will clear that account, owner's payment. And again, I only did two hypothetical accounts to show you why just creating an owner's bank account wouldn't be the best situation or the best solution. Let's go here and we will clear that out. Owner's contribution, owner paid for Dodge Ram truck on 08-15. All right. Oops. Too many zeros. Uh-oh. 33,000. Save and close. And there you see that account has been zeroed out. And then in this case, the owner's contribution has increased again by 33,000. And in fact, I will go in the chart of accounts and make that owner's payments account inactive because it's not needed. So I will go in chart of accounts here and make inactive. Yes, make inactive. And there you will just have the real checking account, the credit card, and you can still keep the clearing bank in the event other transactions like that occur in the business. So that is what I wanted to share with you today. I know that might have been a bit complicated or convoluted, but I hope that was really helpful for you because I know that difficult transactions like that happen with a lot of mid-sized businesses. So I just wanted to share with you how to logically think that through and how to actually record that in QuickBooks Online. So if you feel that this was helpful for you, once again, please click the like button to this video. Also share it with whomever you feel needs this information for their business. And also feel free to subscribe to my channel. And I will be doing more QuickBooks tutorials about this in the near future. So I want to say thanks again for watching and feel free to visit my newest website, www.cbf-solutions.com. And until next time, I will see you in my next video. Bye.